Hey guys, how's it going? Value Venture Investing here today. Holy man. So I had to make a video about this, making a real quick video on what we saw in the oil markets today. This is a historic thing that has never happened before. Crude prices actually went negative. At one point, I think they were down around negative $14 a barrel. Of course, it depends on what contract we're talking about. So in this quick video here tonight that I'm gonna make for you guys, I'm gonna explain to you what's going on in just simple language. Like, you might have been a little bit confused. How are these negative? What's a futures contract? All these types of things. So I'm just gonna give it a very, very basic, brief overview of what happened. So I woke up this morning to this. I looked at my phone and I thought to myself, this must be a mistake. Like, this is almost at zero. And I know last night it was trading at like $14, $15 a barrel, and this is WTI. And I thought it must be a mistake. So I spent a lot of time looking into what's actually going on to realize that this was actually the truth. So what a lot of people might not understand is that when you're looking at oil prices, or that oil prices are quoted, you're not looking at an actual price that is like, here's the price, you can take it, like, you know, you go to the gas station and this is what you pay kind of thing. These are futures prices. There's future markets, right? So basically what a futures is, it's a derivative, meaning it's derived from an underlying asset, in this case it being crude oil. And it's an agreement to exchange a commodity. It's usually commodities. We do now have cryptocurrencies and stuff like that, to exchange it in the future for a set price at a set time. Now, as far as I'm aware, when I learned about these in university. I believe the initial intent of these was just for farmers, for business and stuff like that, right? Because farmers wanted to lock into a price. Like, for example, airlines, they want to lock in a price for fuel, jet fuel, right? So what they do in a lot of cases, and this is getting a little bit more complicated, is they hedge. They take out certain positions, whether it be short or long, to basically, you know, even out volatile movements, or if they want to lock in the price for something, they'll use those. However, these are traded as well. Like, they're on a futures market, so they're traded, and that's what makes the prices fluctuate. So a lot of people might hold these to delivery, and when I say to delivery, oil prices are usually like a month out. I believe all of them are a month out, actually. So for next month, you might have oil price, whatever, $20 a barrel. There's actually people who hold on to those and take delivery. They do the exchange, right? And if you don't exit out of your position, like if you hold a long futures contract in crude, you'll actually have to take delivery, meaning you know, you'll have to sell it or buy it depending on which you know, side of the coin that you're on. And usually contracts come in sizes, and now this is getting a little bit more complicated, but there's been some pretty famous stories in the past, Wall Street traders that have been, you know, had to take delivery of like 10,000 heads of cattle, because usually they're, you know, 10,000 bushels or whatever, they're a certain set quantity. So anyway, that's a basic overview of what a futures is, and I hope that makes sense. Now, there's the spot price and there's the futures price. Now, the futures price is what we talked about, but the spot price, for all intents and purposes, is just the price of right now. It's like the spot right now. And I'm not going to get too complicated with this with you guys, but it goes kind of like this. I'll do a quick little move maybe. Here's your futures price, and right now it's actually much higher. So this is futures, and your spot is down here. Put those like that. Now, as time goes on, this is time, we're doing this very briefly, the two will meet, or essentially they will meet, or they'll become very close. So futures always converge with spot. Now, the futures prices, as like I said, as of last night, the one WTI was like $15 a barrel. And we are coming close to an expiry of next month. I believe it was next month. It's not relevant to what we're talking about right now. But the convergence happens so quick because we're in a situation right now called contagio, or backwardization. Now, this is something that goes way beyond what I wanted to talk about on this channel, but it's very simply depicted here. It's when the futures price is above the spot price, right? So basically what that means in terms of the oil market, and it makes sense right now, as people are willing to pay more to hold it into the future because there's a lot of costs associated with holding that oil. Taking delivery, if you will, all the storage is the word I'm looking for. Holding the storage of this, there's a high cost associated with that usually. So you're in this type of backwardization when the futures price is so much higher than the spot price. And the spot price, I don't know what it was, maybe it was $1 a barrel or whatever, right? So I'll put a little clip up on the screen right now of what contango is, or backwardization. Pause the screen right now if you want to take a look and read that, but that just gives you a brief overview of what is actually happening right now. So this was a very historic time because it came to the end of this contract and buyers were actually demanding money to take possession of it. We were talking about the storage, right? So this actually caused the prices to go negative, right? So we saw at one point, I think it was negative $40 a barrel, and this has never happened before, right? It's a testament to the glut that we're in, the lack of supply. Demand and supply are just so out of whack, right? So that's what we saw happen. And something else that might have confused people is that after this, then WTI was showing up $35 a barrel. And again, like I said, I speak to WTI, but there's different grades of oil. There's a lot of different, Texas Intermediate, or all these sweet and light. There's heavy crudes, there's light crudes, right? So they're different prices. I'm quoting WTI. But then it was trading for like $35 a barrel or $40 a barrel or something like that, right? But what you have to keep in mind is that these futures contracts are monthly, right? So this other one came due, and then we went down to next month, where we're still in this position of backwardization, right? Contango. And I saw that and I thought, well, those prices aren't going to hold, right? And as of right now, you can take a look on the screen. I've been watching, it's been anywhere from 50 cents to $2, somewhere like that. Like I said, those future prices always converge to spot. Even though we got a lot of time to go, I expected those to come down. So I hope this made sense to you guys. I'm not an expert in futures markets whatsoever. Of course, I have a degree in finance, but we didn't focus on this too much, but I do know about it and I've read about it a bit. And of course, I don't trade these because you can get into a lot of trouble, like I said, if you don't take the reverse position and exit out. You'll actually have to take delivery and stuff like that. I don't want to mess with it, right? But I had to make a quick video for you guys just to be like, this is crazy, right? Probably maybe never see this again in my life. I mean, it's never happened before, right? So going forward, what should you do? What's going to happen? Well, you can always play this, with a pure, oil play with one of the producers or something like ExxonMobil or whatever. Personally, I don't want to touch that right now because I think Crude's going to stay down for quite a bit of time. You could also get into an ETF that tracks these, an exchange-traded fund. However, these are usually filled with futures. And like I said, because futures are higher than, sometimes they're a lot higher right now, there could be a lot of weird things going on, especially if they're leveraged, meaning they're like 2-3 times leverage. There can be a lot of decay in those. So I wouldn't personally get involved in it myself. So, if I was going to get involved, I would probably, get into a producer or something like that. Or I'd get into like Chevron or ExxonMobil or something. But personally myself, right now, I'm not really interested in that. I'm not too sure how safe the dividends are. I'd love to know what you guys' thoughts are on that, though. Leave a comment down below. I hope that made sense. I tried to keep it simple without making it too complex. And I felt compelled to make a video on it because I thought that a lot of you guys might have been a little confused what's going on if you don't follow this stuff. And I found it just amazing what happened. So that's going to be it for today, guys. Again, leave a comment down below. I'd love to know what you think. Hit a like, and I'll see you in the next one.